Good morning and good afternoon, everybody. Again, this is Nathan Dean coming to you from the Washington, D.C. Bloomberg Intelligence Bureau, and we're talking about things that are going to come up in April. So, Congress returns this week. They've been gone for the last 2 weeks in turn for the Easter break, spring recess. And, while we are, I personally have also been away, haven't been putting out research on the terminal the past week, I do want to talk about what you think or what we anticipate can happen in the next few weeks. And the first thing I want to start out with is Ukraine aid. Now, Speaker of the House Mike Johnson has spent the last 2 weeks trying to figure out what his plan of attack would be in terms of bringing Ukraine aid to the floor. He has said in interviews that he plans to do it, quote unquote, right away when Congress gets back. They come back, the House comes back tomorrow. Now, but what that means is that the ideas are going to come back. We don't anticipate that we're going to see anything actionable happen in the next few weeks. Don't be surprised if the Ukraine debate, if you will, goes into May. But a couple of ideas seem to have some traction here. First, they floated this idea as a zero interest loan to Ukraine. This is something that President Trump has floated before. Somewhat seems open to the idea. Other things is the Repo Act. They potentially would include the Repo Act. This is an act that would allow the U.S. to seize assets by Russian oligarchs in terms of supporting Ukraine. Now, the problem here is that there are $300 billion across the globe that have been seized primarily by Europe. In the United States, that's only around $8 to $10 billion. And so, if this act were to go forward, obviously there'd be $8 to $10 billion to pay for this. But unless the governments in Europe were to change their views, and obviously there's geopolitical matters here at play, something like the Repo Act wouldn't actually bring much money. It'd be about a quarter of it. So if you presume that the Biden administration ask is still around that $43 billion in terms of Ukraine aid, there's also thoughts that the Republicans may try and add legislation to reverse certain language that the President Biden has done in terms of the liquid natural gas market. Where I'm going with this is that Speaker Johnson is still trying to figure out what exactly they want to do in terms of Ukraine aid. We do think that something is going to come to the floor and then the negotiation process would begin. Overall, we are still cautiously optimistic that something could happen. But like I said before, I don't think it's going to happen in the next few weeks. Don't be surprised if this goes to late April or even early May, much to the chagrin of other folks that want to work on legislation during this time. Now, this brings up the big question here. Well, there's a motion to vacate that has been brought forth. So Representative Marjorie Taylor Greene, during the funding fight that happened 2 weeks ago, brought forth a motion to vacate. Now, she didn't act on it. So the motion is still hanging out there, but that didn't require a vote or anything like that. And this has happened before. This actually happened under Speaker John Boehner's term over about 10 years ago. Now, what's happening here is Representative Taylor Greene is essentially just giving a warning to Speaker Johnson and saying, look, any further action that you provide, I have the ability to call for this motion. And with only one member, with Speaker Johnson only allowed to afford to lose one member, any motion to vacate would probably end up with him losing the speakership. And then we would just go back into the same situation of trying to find a replacement. Now, a couple of things can happen here. So, one, we think in terms of process, Speaker Johnson will bring forth a Ukraine package. Maybe it's this week, maybe it's next week. And if Representative Marjorie Taylor Greene does act on this motion to vacate, there will be a vote. Now, this is where it gets a little interesting. So, we have seen some statements from moderate Democrats, specifically a couple in New York, for example, that have said that they're willing to come to the Speaker's aid and help defeat that motion to vacate. Previously, during the issue with former Speaker Kevin McCarthy, all the Democrats voted to vacate and then therefore voted for Hakeem Jeffries for Speaker. Now, if the Democrats come to save Speaker Johnson's position, there's obviously going to be an ask. And I haven't seen what that ask is yet, but there will be an ask, and that will be one of the requirements to save his role. Secondarily, if Speaker Johnson has to rely on Democrats to defeat this motion to vacate, that sort of weakens his position. So I think what the Speaker is doing right now is, again, just trying to figure out that right package that he can put forth out there, and then potentially, I don't know if it includes getting President Trump's support or something like that, defeating or pushing off this momentum for the motion to vacate. So where I'm going with this, a lot of still things to come. Again, in terms of economic or equity impacts, primarily most of this aid would go to U.S. defense contractors. My colleague Will Lee covers that, and he has some great notes out there talking about that. So if you're in this space for the defense contractors, for example, just let me know, and I'll put you in touch with Will and so forth like that. Other things happening this week. Well, we have a state dinner over at the White House on Wednesday night with Japan, and then obviously this brings up the U.S. steel negotiations. So my colleague Richard Bork and Justin Terese are covering this, and they are going to be putting out a note in the next few days, and I'm just highlighting it here about the outlook in terms of the U.S. steel takeover and so forth like that. President Biden has previously said that he has concerns with this. So if you are in this space and you're interested, please let me know, and I can share that note with you. And I'll share with you next week on the next call. I just wanted to highlight that was coming. Third thing I want to talk about is crypto. Now, remember how I said before that they wanted to Republicans wanted to get stuff done in the House, but a lot of time is being spent on this motion to vacate, this Ukraine aid, and so forth like that. One of that primary issue that I'm referring to is crypto. So the House Financial Services Chairman, Patrick McHenry, has two bills in crypto that he wants to put to the floor. First is what he calls his market structure bill. Now think of this as a very broad bill. This would give crypto platforms the ability to register with the CFTC or the SEC. This would give the CFTC authority over spot markets, and this would just be a more broad regulatory package for the crypto industry. There's another bill out there that's more stablecoin specific. Now, I don't think the broad bill can pass. The one with the broad language about giving the CFTC oversight and so forth, I don't think that can pass. I think the stablecoin bill can pass. I'm giving it a 60% chance. And if this bill were to pass, stablecoins would get a way to register with either the federal authorities or the state authorities, and they'd have to be backed up by 100% of high quality liquid assets. But there's a problem that's brewing here. And if you're in the crypto space, this is something you need to pay attention to, is there's a third bill out there on the central bank digital currency that is led by Representative Tom Emmer. Now, this bill would essentially prohibit the U.S. government from creating a CBDC. Senator Cruz has something out there in terms of the Senate. However, Representative Emmer is making talk about combining all three bills together. So you'd have the market structure bill, you'd have the stablecoin bill, and then you would have the CBDC bill. The problem with that is that if you were to put out a bill essentially saying that you're going to prohibit a CBDC, you may lose some of the Democratic support that you need for the stablecoin bill. And so there's a lot of crypto lobbyists right now that are a little bit on edge because all three coming together may actually just muddy the waters, if you will, because the stablecoin bill, I think, has enough bipartisan support that can get through. There is just enough regulatory gaps there. But if you include the CBDC language in there, I don't know. That could potentially derail things. So anyway, where I'm going with that is it's something to pay attention to. I don't think you're going to see anything actionable in the next 2 weeks, but maybe towards the end of April, you may see a little bit more language there. Other things I want to talk about, SEC rulemaking. So just as a heads up, April is probably going to be a very busy month for SEC rulemakings if you're in the market structure space, for example. Our head of market structure research, Larry Tabb, has been covering this, but there are 5 proposals out there in terms of equity market structure that the SEC has been sitting on for almost a year and a half now, and it sounds like April may be that month that these things come out, more towards the end of April, and what's not going to happen this week or so forth like that. But what I'm telling folks is just remember, the SEC likes to finalize rules on Wednesdays, and they have to give 7 days notice. So if you see Wednesday nights at 6 p.m. an SEC email coming out saying updated events and so forth, that generally means there's a new open meeting out there in terms of rulemakings. So if there's anything that you're following in the SEC space, give me a call, but I just wanted to highlight that equity market structure because I think that's probably going to be one of the next things. There's another rule out there in terms of swing pricing that I think the SEC may move on fairly soon. But again, that Wednesday period at 6 p.m. Eastern is when those emails like to come out. The last thing I'm going to talk about is, well, look, we don't have a lot of time before the election. We're actually updating our election notes. Mine came out just right before our recess. But my colleague Jen Rhee has put out her note on antitrust, and we have notes out on energy, healthcare, infrastructure, and so forth. And we're getting a little bit more granular in terms of what does it mean under President Biden's second administration or President Trump's second administration. And along those lines, Bloomberg News has even put out a report saying it's trying and pick positions with names. So, for example, under a second administration of President Trump, Bloomberg News is saying that Jay Clayton, the former SEC chairman, and Larry Kudlow are both favored to be the second Treasury nominee. Where I'm going is it's great gossip. It's good to watch. It's good to look at. If you want a copy of that article, just let me know. Or if you want to talk a little bit more about the specifics of what would happen under a second Biden presidency or a Trump presidency, let me know. One of the key findings that we have put out there, and my colleague Elliot Stein has a note on this, is executive orders and what that would look like under a Trump presidency. Generally, remember, executive orders are fancy ways of presidents saying to his staff, do this. It's essentially the president can pick up the phone and say, I need you to do this. But if you have an executive order, there's cameras involved, there's a special pen, it looks nice, and so forth like that. So if President Trump comes in, you will see a lot of executive orders, but generally that means they're going to start the process on an 18-month time frame to change a rule or something like that. And we can talk a little bit more about what that is. There's a lot of stuff happening right now, a lot of stuff happening in the month of April, but I want to pause there, say thank you again for attending. And if you do have any questions, please feel free to reach out and we will talk again soon. Thanks. Take care.